Everyone is focused on the crash, but here is what 99% of investors are missing. It wasn't random, it was a complete setup. Behind the scenes, the market is executing a perfect V-shaped recovery. It's triggered by tariffs, fueled by recession panic, and soon to be lit by tax cuts, deregulations, and trillions of dollars in sidelined capital. And no one sees it yet. But in this video, I'm going to show you the exact blueprints that the big players are following, why this crash was engineered, and in the end, I'm going to show you how you will get rich from this perfect opportunity. Now let's dive in. How Trump's evil recession plan will make you rich. So last week, I was scrolling through X and I found this X account which gave a very interesting thesis on the market. The X account is 𝗗𝗶𝘀𝗰𝗋21ST, Sina 21st. And in this investment thesis, or in this X thread, he showed the V-shaped market playbook that he believes that the Trump administration is following. And I'm very quickly going to walk you through these steps. So here you see the different phases. The early crash, the momentum slows, the recovery begins, off to the races, and faces ripped. Now, what Sina says here in this next tweet is the core of my thesis has been that Trump's policies are overall very bullish. So keep that in mind, very bullish. So if it is true, what we're going to discuss in this video, and again, it's a thesis, nobody knows what the future is going to hold, but if this tweet thread is correct, then we are still on track for the biggest bull market in Bitcoin history. All right, so on the left side of this diagram, you see a lot of red, so the tariffs, a psychological shock, an inflationary shock, Liberation Day, recessionary shock, and disinflation. And at the same time that all of this is happening, so the market, I believe we have experienced the worst crash in the stock market since the COVID crash, all right? So all of that was triggered by the tariffs and all of the uncertainty caused by the Trump administration. So on the left side of this diagram, there is a lot of, negativity, things that are causing uncertainty, that are putting sell pressure, that are spooking out the markets and investors. On top of that, the Federal Reserve isn't really cutting rates because they still believe that they don't yet have inflation at such levels that they can lower the interest rate again. But if we process all of this, then we come out a lot better on the other side. And that's exactly what this video is all about. I'm going to break down every single part of this V-shaped market playbook. So let's dissect it. So tariffs are inflationary and will first crash the economy. Why are tariffs inflationary? Well, think about it like this. Let's say that you buy products through Alibaba, through Temu, or any other company, or even your average store. They probably all buy cheap shit in China, let's be honest, because that's where it gets produced the cheapest. But now recently Trump came out and he wants to place a 30 to 50% tariff on all products and services, or all products imported from China into the United States. So if you would spend, $10 on a phone cover, an iPhone cover, then now you would spend $15, meaning that with the same amount of money, you can buy less products and services. So that means inflation is going up. Inflation is basically the phenomenon that everything is becoming more expensive. So that's why tariffs tend to make products more expensive. Let's say that you want to buy a BMW or a Mercedes from Europe. Well, with new tariffs, it means that probably that same Mercedes is going to be more expensive. So you might not be able to afford it with your current income. And in terms of, the stock market, a lot of boards and a lot of companies are freaking out because of the tariffs that Trump is announcing. Because if you take the example of Mercedes and BMW, the United States might have been a very big market for them to sell their cars. But if suddenly, all of these tariffs get placed on the import of these cars, then they might get 20, 30, 40% more expensive, meaning that they will probably sell less cars within the United States. And this means that they will probably have to readjust their expected earnings, or they would have to find different ways to tap into new markets in order to keep up the same amount of revenue and profit. And probably, there's not another opportunity like the US market. So yeah, the market is kind of freaking out. And that's why we saw one of the worst crashes since COVID in the past week. So we saw first a psychological shock, then the inflationary shock. So we're going to talk about that now as well. So here you see the CPI, the seasonally adjusted CPI, the consumer price index, which is basically a basket of products and services, and we measure the price over time to see if they are increasing in price. And here in this chart, you actually see the expected change in prices during the next year. So after COVID, we saw massive amounts of money printing. We saw trillions of dollars and other currencies that were just printed out of thin air, and which were flooded, which flooded the market. And economies or governments or central banks around the world had no other chance. They had to, or no other option. They had to do this in order to keep the economies afloat. But as a result, inflation skyrocketed. The year after COVID, we saw 9, 10, 18% inflation rates. And to get that inflation under control, the Fed started to engage in quantitative tightening, meaning they would increase the interest rates, and this would mean that liquidity would slowly be tightened or lessened. And as a result, inflation rates dropped. But recently, in 2025, here, this red square, you see that the inflation expectation suddenly went up drastically. We did very well after COVID, and then suddenly we see a very big spike again. Well, those are the expected increases in inflation due to the Trump tariffs. So already the market was quite fearful about that. And then on top of it, we saw Liberation Day. What was Liberation Day? Well, if you ask me, I kind of see this as a very big PR stunt by the Trump administration. He basically came out, he announced like, hey guys, we're going to place these very high tariffs on these countries, some of which are our top allies and trading partners. And for all of those other countries, we're going to place a, a 10% flat rate tariff on all products and services imported into the United States. And this came as a shock. The whole world was shocked because everyone was basically going to pay extra in order to sell products and services to the United States. And I see this as a 4D chess move to bring everyone to the negotiation table. Donald Trump, I'm not sure if you know, but he read a book called The Art of the Deal. He's a deal maker. And he recently mentioned that around 90 countries now approached the Trump administration to show that they want to renegotiate the trade, the tariffs that they were charging the United States. Maybe we need to take a step backwards. How did all of these tariffs come into force? Well, after the world wars, we actually saw that the United States made a deal with the rest of the world. They said, hey guys, we have a very strong economy, and we can use our economy to help you guys to rebuild your economy. And you guys can place tariffs on products and services that we import into your economy. We will not charge you guys tariffs or not very high tariffs, and that way you can all piggyback off our really great economy to help you guys to rebuild your economy. But now that we are many decades further, these tariffs have not really changed. And now it has gotten to a point where the United States has such a massive trade deficit, meaning that it buys more goods and services, or it imports more goods and services than it exports goods and services. So basically means that it's net exporting or net giving out money to other countries around the world. And this results in the fact that the United States is going deeper and deeper and deeper into debt. I believe at this point that I'm recording this video, the United States is $36 trillion in debt. That's 36 with 12 zeros. And there's this website called the United States Debt Clock, or the US Debt Clock. And if you click on this, or if you go to this URL, you see this clock of the national debt going up And every time you wink with your eyes, you see the national debt go up with a few million, which is absolutely insane. So, yeah, Trump is forcing everyone to come to the negotiation table, because if they don't renegotiate these tariffs, then they might lose out on very big chunks of income, because many big companies like the European car manufacturers and other kinds of companies, they need to have the United States as a market that they can sell to, because there's a lot of customers over there. So in the short term, this transition may bring a lot of uncertainty, even if the default path is also unsustainable. So think about it in this way. In the past 4 years, we had the Biden administration. The Biden administration was basically, they got used to just increasing the debt ceiling, meaning that the United States could go deeper and deeper and deeper into debt. And they were running the government based on a deficit, meaning they were spending more than they were making. Governments are just like companies, they earn money and they need to spend money. And if you spend more money than you make, then you're running it at a loss. And that means you need to borrow money, or you need to be bailed out. And then they borrow money from the central bank to fill in the gap of their balance sheet. And if you make more money than you spend, you're running it at a surplus, meaning you make a net profit. So, the United States was heading in a direction where every single year they were running on a deficit, meaning that they would have to go into debt further and further. And if you've read Ray Dalio's book, The Changing World Order, every major empire in history basically fell apart because of hyperinflation, massive money printing, and going into a debt spiral in order to save the economy. And that was the trajectory that the United States was on. And now the Trump administration is trying to avoid that future from happening. And in order to do so, they need to enforce or reset the global financial system. And yes, this hurts a lot in the short term. Now, the chart that you're seeing here on my screen is the VIX. The VIX is the volatility index. It basically means the amount of short-term price fluctuations in the market. And what you're seeing is that, and it's basically a proxy to the uncertainty in the market. And here you're seeing that since, March started, we saw that the uncertainty in the market went up quite a lot. And that has to do with, the whole market is kind of wondering right now, what is Trump really going to do right now with all of these tariffs? Is it just 4D chess moves and negotiation tactics to bring everyone to the table, or is this going to be a permanent feature of the global economy? Are we literally going to reverse globalization right now, everything that we've done in the past few decades? Are we going to lose it? Are we going to lose, a lot of jobs? Is inflation going to increase? There's so many unanswered questions in people's minds. And the market doesn't like uncertainty. People generally don't want to make long-term decisions when there's a lot of short-term uncertainty right now. And yeah, that's when we saw Liberation Day, so last week. And that was the start of a very big shift. So as all of this unfolds and recession fears pick up, Trump will have achieved several goals. Disinflation. So let's talk about that a little bit later, but one really important component or pillar of Trump's policies is that he wants to lower inflation by, for example, drilling and extracting more oil and gas, because the United States is one of the biggest oil and gas reserves of the whole world. You might think it was Saudi Arabia, but actually it's proportional. Saudi Arabia is a small country with a very big reserve, but the United States is a big country with a very big reserve. They have the largest reserve in the world. So by drilling and extracting more oil and gas, they want to bring down the cost of energy. Energy impacts almost everything. You all need to use electricity, or you all need to use gas to transport products from point A to point B. So if you can bring down energy and petrol, then you can bring down the cost of everything, meaning you can slow down inflation. On top of that, he will have, forced everyone to come to the negotiation table and to negotiate better trading deals. So either, there are some rumors that the United States and Europe are now talking about a 0% tariff zone amongst each other. So meaning that from both sides, they're going to cut tariffs. Maybe the United States wants to go to a global economic system where there's no tariffs on everything, or just with specific trading partners. You don't know, but this is the point where they can make really great deals if they play their cards right. They want to bring down the interest rate because they need to refinance a large amount of debt. And on top of that, they want to get the Federal Reserve, the Central Bank of the United States, to bring down the energy rates. And that generally means that whenever interest rates goes down, then it means that liquidity will go back into the market. And when there's more liquidity, the price of assets tend to go up, which attract more money into the market. And then you see this whole cascading effect. So when money is flowing back into the market because of all of these new policies, there will be cheaper energy, meaning there's lower inflation. With lower inflation, it means that there is enough room for the Fed to keep cutting interest rates. On top of that, the Trump administration wants to enforce some tax cuts, meaning that the average person has more disposable income to save and invest. And they also want to implement some deregulation. And this should all trigger a massive new economic boom in the United States and hopefully also in other parts of the world. So the tariff shock will fade and recession fear will replace inflation fear. Now, the Trump administration is not just aiming to balance the budget. What I mentioned before, governments are basically businesses, and if they spend more money than they make, they're running at a loss, which they have been doing for the past few years. So right now they want to go to a point where at least they're spending as much as they're making or less than they're making, so they're not running on a deficit. So that's one very important part. But the other part is that they want to reindustrialize the USA. They want to focus on rebuilding the real economy. And the real economy are the parts that produce value, create jobs, and generate lasting prosperity. What happened in the past few decades? We entered the era of globalization. During globalization, basically, production shifted from high-income countries to low-income countries like China, Thailand, Indonesia, Cambodia, Laos, Vietnam. And those high-income countries basically became knowledge-based economies, where, for example, you have Silicon Valley in the United States, where a bunch of big brains think about new innovative technologies, but the production happens in China. Think about the iPhone. The iPhone was designed in Silicon Valley, but it was produced in Foxconn, which is a massive factory in the United States. And so they want to bring back production to the United States. So, and also they want to focus on drilling. They want to extract more oil and gas. So here you see this chart under the Biden administration. There was around 1.6 million acres of land offered to extract oil and gas, and half of that received bids. So there was around 870,000 acres that was being used to extract oil and gas. And already under the Trump administration, it's roughly 6 times more than that, and a lot more land has been offered to drill or to extract energy from. So right now they're ramping up energy production. Again, the United States has some of the biggest reserves in the world. And they're also going to work back on bringing back the factories, the production to the United States, mining and other critical supply chains, and strategic industries. So they want to bring back production from low-wage countries to the United States. Now, you might wonder right now, do Americans really want to have those low-wage jobs? Right now, we have those sweatshops in China where, we have cheap, almost slave labor that are producing sneakers, cheap T-shirts, clothing, iPhones. Do US-based people really want to pick up those jobs? And even if they do, their wages are much higher, meaning that your everyday products are probably going to cost a lot more when they're being produced in the United States. And that's why people believe that in the short term, these policies might actually increase inflation. Now let's talk about critical industries. So one critical industry is the semiconductor industry, which are basically the chips that make up your your iPhones, your iPads, your computers, the computers in AI data centers, like every single computer or device needs semiconductors. And right now, Taiwan Semiconductors, which is a Taiwan-based publicly traded company, they're producing all of the chips for almost the entire world. And you know that China wants to invade Taiwan. So if they invade Taiwan right now, the whole world and the United States is basically, at risk of losing their access to these very valuable and critical semiconductor chips. So they used all of this economic and political pressure right now in order to make a deal with Taiwan Semiconductors to open up a facility in the United States to produce these chips locally, making them less dependent on Taiwan or other areas around the world where this could be produced. They also want to remove some of the income taxes, and this results in savings for the average lower class, working class, middle class households. So you see there's around 29 million households that are between 30K and 50K. They will save around $1,700 per year, which they can save or invest into their future. There's around 22 million households in the 50K to 75K household. They will save an additional $4,100 that they can save and invest, all due to these expected income tax cuts. Another 15 million households in the income bracket 75K to 100K, they will save $7,200, which they can save and invest. Then there's the households between 100K and 150K, around 15 million households, and they will save annually around $12,000, which they can save and invest in their future, which is absolutely important because everyone needs to think about their future. Everyone needs to build up a little war chest of savings and investments, which they can use to live a nice, comfortable life without having to have much financial worries. You don't want to live paycheck to paycheck. It just drains you completely. You need to build up some wealth over time. And if you don't have any disposable income, it's going to be very hard. And the average person is drowning in the current economic situation. So that's why there needs to be a change. And the biggest pillars of this current Trump administration are the following. Number one, deregulation. So there's a lot of podcasts out there of, for example, Elon Musk, and he talks about building his company SpaceX. He's basically building rockets in order to help turn humanity into an interplanetary species. But he's saying that if you want to build rockets or a launch pad, you need to have so many different approvals and licenses from the government, and they're basically choking innovation. It's so hard for entrepreneurs to actually build and create value because they're being, swallowed up by red tape and bureaucracy. And if you can deregulate some of that, then you will actually give a big impulse to innovation, and you can actually increase living standards and create more economic output. Regulatory clarity. So in the past few years, the crypto industry, for example, was under heavy attacks by regulators, and they created such a negative and uncertain environment that many crypto companies just were considering like, hey, let's just move to the United Arab Emirates or to Singapore, where we're treated much better. They want to reorder global trade. So again, what I mentioned, the United States needs to pay a lot of tariffs, import tariffs, if they want to sell products and services to other countries around the world. So they want to reset the whole global economic system and renegotiate different deals. They want to extract more oil and gas to drive down the cost of energy and as a result drive down inflation. And they want to attract new high net worth individuals. So they recently launched a visa program where you can invest $5 million and you can get a permanent residency and work permit in the United States. I believe they raised, $5 billion by selling this specific visa in the past month. Now the next big problem, I would say the next big elephant in the room that they need to address is the Social Security. I believe Social Security is one of the biggest Ponzi schemes, not only in the United States, but everywhere in the world. because we have gone to such welfare states where we kind of made this social contract that the working population will take care of the elderly when they retire. So when we're paying, income taxes, which partly contribute to like a societal pension fund. And when people retire, they receive retirement income from the government. But, the whole calculation behind Social Security is wrong, because after the Second World War, we had a generation called the baby boomers. There were a lot of babies after the Second World War, and they grew up and they became a very wealthy population. They rebuilt the economy after the World War. And they're very populous. They're with many people. And right now, they're slowly retiring. They're 60, 70, 80, 90 years old. And they expect to retire comfortably, to enjoy the fruits of their labor. But there's one big problem. The generation of workers right now, the younger generations, they're with a lot less people than the people that are retiring. We are dealing with an issue of an elderly population and not enough people in the young workforce to pay for their retirement. And if they want to maintain this system of Social Security, then they will probably need to do two things. They need to increase the retirement age, and they need to tax people that are working. And if you ask me, you can only increase the taxes so much to the point that at one point people will just say, forget it. It's not worthwhile to work anymore, or I'm going to stop working and live off unemployment benefits, or I'm just going to move elsewhere to like UAE, where there's a lot lower tax rates, where I can actually build up real wealth. And then there is a problem that those funds which have been collected in the Social Security Trust, which should be used to pay those retirements, it has not been managed very well. For example, if you compare it to the S&P 500, the S&P 500 over the same period has generated almost 2.5x more returns than the Social Security Fund. So that's why the United States is going to set up a sovereign wealth fund to generate higher long-term returns than the current fund, which needs to pay out these entitlement programs, because otherwise it's going to be absolutely unsustainable, and the whole Ponzi scheme, pyramid scheme is going to crumble, and then we might have an even bigger problem. So all of these actions are directed towards making America the #1 place in the world to build, hire, invest, and live. So here's a cycle that they're going through according to the Trump administration. They're going to reform the American government to become the best platform in the world in terms of legal system and the regulatory environment. It's very American, of course. I'm not from the United States, but very patriotic, of course, America first. That's why they're implementing initiatives such as DOGE, the Department of Governmental Efficiency. And then the United States will become the most attractive place in the world to do business and to invest capital. Then America becomes a top hub of production and consumption in the world. Then that capital will flow into Main Street, lifting the real wages for workers and middle-class Americans. And then America becomes the best place to work and live in the world. That's their philosophy. Now, there is another very big problem. It's like a dark cloud hanging above the United States right now. We talked about it before. It's the fact that the United States has been running at a budget deficit for the past few years, few decades actually. And right now they are $36 trillion in debt. And part of that debt needs to be refinanced very soon. But the problem is the interest rates right now are quite high. And the Federal Reserve, which is the central bank of the United States, they don't want to play ball with the Trump administration because they believe interest rate is the inflation rate is still too high. And if they cut interest rates right now, then actually that might send the inflation too high, which they have been mandated to keep inflation rates around 2%. Now, there's also another way to bring down the inflation rate, the interest rate outside of the Federal Reserve. Think about it in this way. When I borrow money to you, I will charge you an interest, but the interest depends on how risky this transaction is, how likely you are to repay me. When the probability of you repaying me is around 100% because you have a good job, the loan is collateralized, meaning that if you don't pay me back, I can take your car or your house. Then I have a very big likelihood of you paying me back, so I can charge you a lower interest rate. But if you have a big likelihood of defaulting, so you don't pay me back, or you're going to pay me back over a longer period, then I will probably charge you a much higher interest rate because it's more risky. So lower risk means lower interest rate, higher risk means higher interest rate. Now, what is the United States doing right now? It's improving its position, meaning it's doing all of these drastic cuts and renegotiations in order to make it a lot more healthy. Governments or like businesses, they need to become profitable. They need to earn more than they spend, then they're healthy. That's what we call balancing the books. Now, when you have a healthy balance sheet and a healthy cash flow statement, then you have a much higher likelihood of paying back your debt over time. So this means that investors or lenders will trust you more, meaning that the interest rates will be forced down. So this is what's currently happening. The Trump administration is focused on bringing down the long-term interest rates through the Treasury rather than the Federal Reserve. So if debt holders trust the Treasury's plan, then the long-term interest rates will fall as debt holders perceive less default and inflation risk. So the big problem is that around $6 trillion of debt is maturing in the next 12 months, meaning it needs to be repaid or refinanced. And right now the interest rates are roughly 2 times higher than the interest rates were in the previous 2 to 10 years. So if you need to refinance all of that money, then at a higher interest rate, it means that the interest payments are going to be almost double, and this is going to put a lot more pressure on the US economy. They're already running at a very big deficit, and if on top of that they also need to pay twice the amount or a higher amount of interest repayments or interest payments, then the average American will have to work or pay more taxes in order to just surface those interest payments. So if the United States can find a way to drive down the interest rates right now, then they can refinance their debt at a much lower rate. So here is actually what is currently happening. The government runs a budget deficit and covers okay, let's restate this. So the government is like a company, and right now they're running at a loss, and they cover this loss by borrowing even more money to fill up the gaps in their balance sheet. And as this debt matures, then the government refinances it with more debt. So that's what we just mentioned. And when you refinance it, then annual interest payments compound, consuming a larger share of the federal budget. And the bond market perceives this as a greater risk. So if you keep filling up the gap in your balance sheet with more debt, which causes more interest rates, which you then refinance with more debt, which causes higher interest rates, it's what we call a debt loop. And this debt spiral, or this debt spiral, will ultimately cause the economy or this government to fail, because they're already $36 trillion in debt. At one point, it's just a ticking time bomb, and nobody will take the United States serious anymore. Nobody will want to borrow from the United States. And if the interest rates, if the interest payments become too high, then it becomes an unsustainable system, and the country will start to drown in debt to the point, that they will just have to do a big reset. And that's actually what people believe is happening right now. This is the financial reset that is needed in order to ensure that the United States will remain a powerful and viable economy on the global playing field in the next few decades. So the current path at the high interest rates, so if they need to refinance the debt at the current interest rate, then it means that the total interest that they need to pay is around $1 trillion, just in interest payments, all right? Interest payments, not even debt repayment, interest payments. Now, if they can find a way to bring the interest rate down to 3%, it means that the interest payment will drop to $750 billion, meaning $250 billion less that need to be paid in interest. So those $250 billion of savings can then be used for other more productive activities that actually contribute to the economic growth or the welfare of the society. So that is one of the big plays that the Trump administration is trying to force right now, to bring down the interest rate, to avoid really high interest payments. So why isn't the Federal Reserve helping in bringing down the low interest rates? Well, the Federal Reserve, the central bank of the United States, has been mandated to keep the inflation rate somewhere around 2%. So they can print money or they can bring down the interest rates as long as the inflation rate stays around 2% per year. Right now, the CPI, the consumer price index, is higher than 2%. So according to their mandate, they cannot lower the interest rate, because that will mean that more liquidity will flow into the financial system, meaning that inflation will probably go up even higher. So that's why the Federal Reserve can play ball, but the United States is working on this plan in order to force the interest rate down by increasing confidence. And also, if the market crashes really hard because all of the uncertainty, all of the tariffs, and the United States goes into a recession, then the Federal Reserve might be forced to start lowering the interest rates and to start printing more money. So the resolution. So how are we going to get to that V-shaped recovery? So let's go back to this diagram. Let's walk through each of these steps. Here, we saw the early crash. We've experienced that. You know, the uncertainty. Bitcoin went from $108,000 to $80,000. We all the way saw $78,000, $74,000. Liberation Day, we saw the biggest stock market crash since COVID. Now there's a lot of, recessionary fears, like, are we going to enter a period of recession? At the same time, there's a lot of stuff happening because there's new trade deals being negotiated. The Fed is being forced to, drive down the interest rates. Doge is cutting government inefficiencies left and right. And we will start to bottom out once the Fed is starting to cut rates, once Doge has cut so many things that there's not many more significant cuts that can be made. And then we will start to see that trillions of dollars, which are now waiting along the sidelines, will start to flow back into the market as consumer confidence increases. And as the market is starting to rally again, it is actually healthy again, because there's a lot more better trade deals. There's cheaper energy because the United States is extracting more oil and gas, and cheaper energy means inflation rates are lower. On top of that, they want to cut income taxes, meaning that the working class and middle class households have more disposable income to save and invest, and a new wave of deregulation will make it easier for entrepreneurs and companies to innovate, to invest, and to build more value, resulting in a massive economic boom. And if this happens, then we are on track for the biggest Bitcoin bull market in history, all right? So if this thesis is valid, then this is just a short-term dip, a short-term correction within a longer-term bull trajectory. So I'm really curious to hear your thoughts after hearing this investment thesis or this market thesis and seeing it all, having it all laid out in this video. Do you believe that a V-shaped recovery like this is likely? Type yes in the comments below this video if you believe that a V-shaped recovery like this is likely, and type no in the comments below this video if you believe that this will not be the case and that we're going to enter a prolonged bear market, a prolonged recession. Yeah, so really curious to hear your thoughts. And hey, do me one quick favor. If you enjoyed watching this video, make sure to smash the like button. It will give me good feedback to understand if you guys enjoyed watching videos like this one and whether I should make for more videos like this one or not. And if you haven't done so yet, also consider subscribing to my channel, because if you want to make a lot of money in the financial markets, you need to stay informed. And I'm going to be in the trenches by your side, and I'm going to be your guide, helping you to make sense of everything that's going on and helping you to position yourself for maximum profits. So, all right. Hey, thanks for watching. Peace out. Take care. And I will see you in the next one. Have a nice day.